told you there was going to be a dash of companies going public before the end of the year. Last night, Airbnb released their public IPO filing. They're going to debut on the Nasdaq under the ticker symbol ABNB. But unlike with DoorDash, which was surprising when we learned about the underlying strength of their business, Airbnb's business is generally what we all expected. It's been a tough year for Airbnb, but they've been weathering the storm as best they can, and probably better than you might have assumed, quoting CNBC. The company made $219 million in net income on revenues of $1.34 billion last quarter. That was down nearly 19% from $1.65 billion in revenue a year prior. Despite primarily turning in net losses, the company has had other occasional quarters of profitability, including the second and third quarters of 2018 and the third quarter of 2019. In 2019, the company reported a net loss of $674 million on revenue of $4.81 billion. Thus far in 2020, the company has turned in a net loss of nearly $697 million on revenues of $2.52 billion. So revenues have nearly been cut in half. The decline is likely from the impact of the coronavirus, which put the brakes on leisure and business travel earlier this year. Airbnb said its number of listings has declined and may continue to decline in part due to the pandemic. In particular, some people rely on Airbnb to help pay living expenses and mortgages, and those people may get knocked off the platform, end quote. As friend of the podcast, Rafat Ali, tweeted, quote, Airbnb has $4.5 billion in cash and equivalents on the balance sheet, so they'll be fine through this dark winter and well into next year, end quote. But as also friend of the show, Shira Ovide, tweeted, quote, is it better to be Uber and see your numbers get ugly, but your stock price go up, the year after the IPO because of a pandemic-related travel freeze, or to be Airbnb pitching your IPO in the middle of a pandemic-related travel freeze? Not sure, end quote.